Hi, I'm Rinde from AskRinde, and welcome to the channel where we help with your foreclosure, income, and credit. So if you need direction and you need guidance, please feel free to reach out to us and click the link below, and we'll be glad to help you. So in today's video, we're going to be talking about how to cure the real estate market now and also after the coronavirus passes. We're also going to be talking about a new potential drug that could be the cure for coronavirus, and also a new $2,000 a month stimulus package that's being pitched in the House currently. We're also going to see how all this plays out on the mortgage markets. So let's get into today's video. Can't wait. Stay tuned. So this week we have some promising news out of Chicago. The drug company Gilead Pharmaceuticals has produced a drug called Remdesivir, and this drug actually was administered on 113 patients out of a hospital in Chicago. These people were in super critical condition. They were not, some of them were not expected to live, and there were some positive results and turnouts where some of them actually have now been discharged. The drug had a really positive effect on their fever and respiratory symptoms, and really helped them to not only recover, but also, basically beat the coronavirus that was running through their system. So we're hoping, all of us are hoping for a resolve to this. If you have family here in the U.S. and also overseas, you can see that this has been a widespread effect, and we really just want to get some sort of cure for this, and a place of at least some safety, so we know that if someone has this issue, they have something to turn to. I really feel that you can't really open the economy, you can't do anything without having things in place like testing and also some sort of cure or something that can actually combat the disease. I don't know what your thoughts are. I would like to get your thoughts in the comment section, so please let me know what you think. Do you think that we should open up the economy? Do you think that the protests that we have going on and some of the fights that we have going on, whether or not the economy should start to go forward, are valid? Or do you think that it's better to be safe than sound? Because I look at it like this: if you can't secure your health, you can't work, you can't run a business, you can't do anything anyway. So I think that at least the sound thing to do would be to be able to have at least testing and a way to be able to have things under control to a point. Right now, as we can see, people are dying in the thousands. And here in, we're here in the New York and New Jersey area. I'm in Bergen County. We've had almost 5,000 deaths here. So I would definitely like to see some sort of security or things in place regarding testing before we move forward with opening things back up, just from an aspect of not more people getting sick and really shutting things down completely. So hopefully this drug, Remdesivir, will be promising, and they're seeing how people react after they leave the hospital. And of course, if it's something that continues to work, then they're going to send it to the FDA for approval, which we're assuming that the FDA will quickly approve it to be able to dispatch this disease as quickly as possible. Many people's lives have been turned upside down by this, so all of us are looking and hoping for a cure for it. So there's a new $2,000 per month stimulus package being floated called the Emergency for the People bill, and it's being floated by 2 Democrats in the House. And it basically is meant to add additional financial help to Americans all across the country. There are many people who have a lot of responsibility and bills waiting for them. And like I've said many times, the $1,200 and $2,400 a month for married couples is really not going to do much when it comes to when things restart. When things restart, you can expect there's going to be a lot of frustration, a lot of turmoil, because people are going to be scrambling to not only either save their homes, save their credit, but then they're going to be frustrated because they won't have the money. They're on the hook. So this bill is proposing that everyone 16 and over that makes less than $130,000 a year be given $2,000 a month. It's also calling for married couples that are making less than $260,000 a year to be given $4,000 a month. And it's also calling for $500 per child up to 3 children. Now, one thing that this does differently that the CARES Act doesn't, which some people are calling a loophole, and that is that it includes and will give assistance to people who are adults that have disabilities and also to students. So that's a big thing, because the CARES Act did not cover adults with disabilities that were claimed as dependents and also students that were claimed as dependents. So this is meant to run for 6 months, or up to when they see that 60% of people have actually now gotten their jobs back, where I guess like a trigger or a signal for like a revival or a restart of the job economy. Right now, I think we're going to be moving towards 24 million unemployment claims. So that's a very, very high number. And I think that it's staggering that we have gotten to this place in about 6 weeks. We're at a place where we're almost at 40,000 deaths, and we're also almost at 23 to 24 million unemployment claims that have been filed. So it's staggering numbers in a short period of time. So hopefully the help that they're extending will maybe be granted. We'll see what happens. Again, this has to actually go from the House to the Senate, and it has to go from there to be signed by the president. So we'll see what happens with that. Now with real estate, there's only one way to be able to cure the real estate crisis that's coming, and that is to take all the arrearages, all the months that's due, and put it on the back end of the loan, or do a deferment or a loan modification. The mortgage servicers can actually do this, and the investors behind it probably will be the best, will be wisest in their best decision to be able to allow that to happen, simply because there is no way that they can expect that they will do forbearances and tell people in a climate and an environment where the entire economy of the world economy is shut down to be able to pay all the months that's due in the forbearance come June. It's not going to work. There's going to be a lot of defaults. There's going to be a lot of foreclosure filings. There's going to be a lot of turmoil. So I think that if they see reason, that's the only way that they can figure this out to be able to help stop the chain effect, because all these things are connected. It's like a domino effect. It affects renters, it affects people who own property, mortgage, and then it affects them. So what happens basically is that for them to take the arrearages, meaning the 3 months, the April, May, June, and take that and extend the life of the loan on the maturity date of the loan, put all those months, however long this takes to be able to sort out, take that and put it on the back end of the loan. That's going to solve the issue across the board, because when things open back up, you're going to have a combination of many factors, including not only just people who can't pay the lump sum for the forbearance agreement, but then also a trigger of filings, and their courts backed up, and so there's going to be mass evictions, there's going to be fallouts. Then at the same time, keep this in mind that people who are moving from place to place, there's just going to be problems, because like a domino effect, it'll be harder to find a place to move. Some have said that the apartment market is going to go up, and I'm not saying that that's not the case. What I will say is that coming back from this and starting out, it's going to have to be a slow walk, but it's also going to be really tumultuous, because you have people who won't be able to pay the mortgage, the lump sum that the bank is requiring. And in addition to that, you're going to have some of the landlords, a lot of the multifamily owners, filing for evictions for people to get them out so they can get new people in. Thing about it is that where are those new people coming from? So it's like, I feel like most times in the markets, haven't been doing this for a long time. Sometimes you have the residential sales or commercial sales, those markets doing very well or bad, and then you have the rental market stable. In this case, this is going to affect everything. You're going to see that in some cases, some places, that the rental markets will go down. So whereas before you were charging more, you'll have to lower your price because of the environment. And so with all those things and all those factors, the way I see the real estate market, the only way for them to resolve it is to take and defer whatever the months turn out to be. Many are saying that it may be May, some are saying June, but whatever those months are, just take that and pull those and put them back on the back end of the loan. Extend the maturity date of the loan, whether you have a 30-year fix, whether you have a 15-year fix, or an ARM. You can actually just extend the loan, and they still get their money. But at the same time, they won't cause a problem, because if they don't, and they force people's hand, what's going to end up happening is that people, just like they did in 2008, will walk away. And when that happens, there's going to be a supply issue in the market, where the market will all of a sudden have all these homes, and it's like the law of supply and demand. When there's more supply, then demand goes low. When there's less supply, demand goes high. So understanding that law, understanding the fact that they flood the market with properties, they're not going to be able to get, first of all, movement, because the biggest issue that you have with bank-owned properties, when they go through the process and force people into foreclosure and they have to take these properties back, what will happen basically is that in this case, because of the crisis and the fact of the unemployment, which is what most people are looking at, they're going to have a major problem with aging. And that's the worst thing for any bank, to have aged assets on their books, because the longer those things sit, the more money it costs. They have to now, some banks are even going to the point of hiring security to be able to tour their properties. So it's just like a bloodbath, because what happens in essence is that they're going to have to hire security in some areas to be able to tour the properties to make sure that it's not break-ins, they're not people who are vagrants going into the property, people are not stealing things from the property. So there will be a crisis in real estate. I do believe that, because of the fact that many people will start at different times. Some may start working earlier than others, so the mortgage servicers have to be prepared to be able to defer whatever months they're behind to the back end of the loan, so that they can actually, just basically continue from where they stopped. Some people were current, some people were in pre-foreclosure status when this whole thing started. So they're already in a compromised position, and they're already queued up for the lender to file a lit pendants against them. So again, people are always in different positions. We have to understand that. And none of this stuff is easy. It seems to be simple, but at the same time, it's complicated at the same time, because you're dealing with people's lives, you're dealing with so much at stake, and this is not child's play. We take things very seriously when we help people with foreclosure, and we help them through navigating the process. And I can tell you that there's so many factors that go into it. That's why I strongly encourage you, if you need help and you need guidance, make sure you download my free stock foreclosure guide by clicking the link below, because at the end of the guide there is a form that you can actually click and fill out, and that'll send us your information and we'll reach out to you to help you. So that leads me into what's going on in the mortgage market, because when the mortgage market, what you're seeing now with the fact that Chase is tightening their guidelines and they're pulling back on really taking on new business, and they're refusing to do things like HELOC loans, they're tightening restrictions, they're raising up your credit requirements to 700, they want 20% down. It's so many crazy things going on, but the main thing that they're doing really is protecting themselves. With the mortgage companies, they have to make sure that they're also issuing and writing good loans. I actually do business here in New Jersey, and I can tell you that my mortgage bank that I do business with, they're very careful, and they're more stringent than with their guidelines than probably some others. And that's simply because if they write a loan, and I bring them, let's say for example, one of my buyer clients, and let's just say my buyer, takes the loan, we close on the property, and 6 months later, the buyer then stops making the mortgage payment. What's going to happen is that the mortgage servicer is going to come back to my mortgage guy, and he's going to say to them, you have to buy back this loan. And that's because they want to make sure that they're not stuck with someone who's going to be delinquent. So the mortgage banker and the mortgage broker knows that up front. They know that they're on the hook. They know that if they write a bad loan and you default and you are compromised, they will be responsible for that. They will lose their commission. They would have to basically buy the entire thing back, hold it on their books, take payment from you, go through the foreclosure process and all that. And that's why it's like a nightmare. They don't want to deal with that. So what they're doing now is they're doing things like tightening the guidelines. They're also asking for proof of furlough. I mean, it's crazy. They're asking for things that they're really trying to protect themselves. They're things like, several employment verifications, even up to the day of closing. I had a closing recently, and they did employment verification the day of closing. Some are even rechecking credit to see if your credit score has either dipped or there's been any changes to it. So you have to keep that in mind if you're going to be not only refinancing your property, but also if you're looking to try to purchase. There are definitely opportunities that are going to be created with this market. The one thing is, though, you have to make sure that you're working with the right people to be navigated through the process. If you're in New Jersey, I would love to work with you. You can reach out to me by clicking the link below, and I'll be glad to help you if you're looking to buy a property, or you're looking to sell your property, or you need guidance on what to do. I'm definitely always available. You can reach me by clicking the link below. So I'd like to get your thoughts on what you think about the real estate market, if you think there's going to be a crash, if you think that we're headed for a bubble burst, if you think that this potential cure with the remdesivir may work for the coronavirus, and really where you are, what your thoughts are as to when the economy should restart, what your thoughts are as to the entire process that we're in, this entire dilemma that we're in. I'd like to get your thoughts on it, and basically hopefully you can share something that maybe help someone else. So please feel free to download my free stock foreclosure guide. If you're looking for guidance and you need help with your foreclosure, your income, and your credit, we would love to help you. And I look forward to seeing you guys on the next video. Until next time, thank you so much for watching.